Welcome to another episode of From My Desk. This is Justin Hitt, and we're going to go over this little list here, and we have a couple of questions from our subscribers about identity theft, increasing income during high inflation, and ways to lower your taxes legally. So let me just set this up first. Each of the From the Desk episodes are literally things from my desk. They're questions from subscribers. There are other types of topics, and I try to make the three episodes that make up the From the Desk videos. I try to make those somewhat related on theme. So today it's about sustainable wealth. It's really how do you fight that identity theft? How do you increase your income with high inflation, and how do you lower your taxes legally? And really all these questions are about how do we keep more of the money we earn rather than giving it away to other people who may not directly use it to benefit us or may not use it in a way that we agree with. So identity theft is a massive problem today. I actually went online and tried to find some facts about identity theft. It just made me nauseous. As the economy gets worse, there are these overseas scams. There's data breaches at large banks. There are other types. So right here, 12,098 reported data breaches between 2008 and 2020. It's 11 billion records stolen. So I have a background in cybersecurity, risk management. If you think your data is secure, then you have got another thing coming. You don't really know what's going on here. The ad systems are tracking you. The banks are tracking you. The FDIC gets daily updates of your bank transactions as part of the insurance program that they've got going on there. Obviously, they're looking for fraud and they don't necessarily report that information to any agency outside the FDIC. But wouldn't it be nice if the IRS knew that information so that they can look to see if you're making cash transaction payments? Politicians are constantly talking about how to protect people from money laundering, they're going to crack down on PayPal and Vimeo and all these other little sidebar accounts. Look, frankly, what they're doing is they're going to squeeze the middle class who don't know how or don't have the resources in order to protect themselves from a financial perspective. But first off, though, identity theft has nothing to do with the government. It's something that happens all the time, at least once or twice a year. Even though I'm very careful, there'll be some forward-facing account that's going to have a transaction that I didn't make. It could be a test transaction, it could be something else, but my data has been stolen through the Office of Personnel Management way back in the day. Several banks I've been banking with have had their data breached. And of course, my credit alerts, which is the first tip, I use a credit alert service that actually gives me kind of a heads up if there's anything going on. And what I tend to do is if I see any suspicious activity is I simply freeze the accounts. Now you might be saying, well, Justin, if you freeze your accounts, how do you use any of your money? Well, I set up a very interesting system. It's worked for me for years, is I actually have what I call forward-facing accounts. Now, I'm able to get very large credit limits, and that's what makes me a target. You as a high income professional or an entrepreneur have the ability to get very large credit lines. That's what makes you a target. But that $5,000 credit limit credit card that has a hard cutoff is what I use in the store. So the card I'm using to get gas, the card I'm using to buy everyday things at the store, unless it's a special purchase, I use a card with a very low limit that's paid off regularly because the greatest protection against identity theft is good bookkeeping. So you have this forward-facing card. So if I do write checks for big transactions, but the checks go to legitimate businesses that I've been working with for a while. But if you're using at a gas pump, if you're using it at a convenience store, use a throwaway credit card, a credit card that you can really monitor, that you're paying it off every week or every month. But ultimately, a lot of credit cards scams, for example, are stolen off of the card reader in uh, the gas station itself or in the convenience store itself. It's just a fact of life. People put a little thing over top the card reader. They do it on ATM machines as well. And so if you have a throwaway card that you're using on those, and some banks actually have temporary cards that you can use, but ultimately get a little $5,000, $5,000 credit limit reward card and just monitor the transactions. And that's a good start. Now, identity theft doesn't just happen on the credit card side, it can happen in entire mortgages. I got a phone call once, and somebody was trying to do like a $500,000 mortgage, and they were verifying some of the information that was put in, and they just happened to put my real phone number in. And I get a phone call, and they're saying, "Hey, well, Mr. Hitt, we understand you're going to buy this house. We need a little bit more information from you. You need some copy of paycheck stubs." I said, "Buy what house?" Now, I do buy houses. I have some rental properties. I'm involved in home transactions throughout the year because of the real estate side of what I do. But I didn't know anything about this house. I didn't know anything about it. I said, "Look, where is this located?" No. Now, here's what I need you to do. Now, this is a very important tip. If somebody does contact you and you are able to validate that it's a legitimate bank, now this could have been a scammer calling and saying, "Mr. Hey, somebody's trying to use your credit information. Can I get your name, birth date, and social security number to verify that we're talking to the right person?" There are different kinds of scams, but in this case, I was able to authenticate it was a legitimate business. I got their extension, and then I called their main number for the company. It was a national bank, and then I entered the extension, and then I got the person I was looking for. But I was also able to verify that person was who they were through LinkedIn. Now that's not a guarantee, but ultimately, once I verified it was a real bank, I was able to open up a fraud alert. We contacted the FBI. There's a series where you can contact the FBI, and basically the bank took care of the majority of it. But I was able to freeze my accounts and make sure there's no money coming out. And what they probably were trying to do is launder money by buying a large house, turning it over quickly, and then they use illegal cash to put the down payment down, buy the house, turn it over, and then they've got legitimate cash through somebody else's thing. Plus, they're going to use a mortgage so they can float the house with minimal out-of-pocket expenses. But ultimately, when they sell the house, they keep the equity, they keep the cash of the sale. Identity theft is a horrible problem, and I have, again, you want to limit your exposure by that forward-facing card. You want to have regular bookkeeping. And now, what do I mean by regular bookkeeping? Regular bookkeeping, and bookkeeping is the bane of my existence. I'm surrounded by files here where I'm sitting right here in this particular area that I film. And bookkeeping doesn't get done regularly for me sometimes. And sometimes I have bookkeepers that rack it up. Sometimes I'm doing specialized bookkeeping for different projects. Maybe I'm running out the cash flow on a different project and I need to segment my books to see what expenses allocate to that particular project. It is just, it shouldn't have to be this difficult. However, if you get Quicken, QuickBooks, some platform that is going to download the transactions from your bank account, and you go through every week and enter any of your cash transactions. Now, here's a real good takeaway tip. A wealthy individual friend of mine actually pays for everything in cash and gives himself from a petty cash account. That means basically there's a cash account, which is literally an envelope with some cash in it. And they take their daily money out of that. At the end of the day, they put their money in. At the end of the week, they basically, anything that came out of that petty cash account was they use a card for gas, but it's usually meals and entertainment. So what they simply do is reconcile that petty cash account, look in the envelope, how much money's left over, and they assign all of that to meals and entertainment. So they're not tracking, I have $2 at Food Lion, $2. No, it's just they give themselves an allowance of $100 a week. They put the money they don't use at the end of the week back in the envelope. They reconcile the account out, and it is just off the top of their head, meals and entertainment, gift and cash gifts, like when you're paying your kids stuff. But here's the point about that is that the petty cash account, it regulates your spending a little bit because you actually do have cash. And by the way, these are people that make $500,000 a year. They don't need to regulate their spending, but they do like to have a little cash in their pocket in case they want to grab a sandwich somewhere, in case they want to pay a tip, something like that. But ultimately, at the end of each week, they balance out the petty cash account. Now, what do they do if they run out of cash during the week? Well, they have credit cards with them. They have other ways of paying, but ultimately for their meals and entertainment, for their socializing and personal expenses, they've got the petty cash account. Now, does this work if you're an entrepreneur? Not necessarily, because you don't want to be paying any business expenses in cash because then you won't have the proper paperwork. And this will get to what we're going to talk about at the third part of our call today. This will get to reducing your taxes, but this petty cash account saves a lot of time. Now, at the end of each week, you want to tally up, make sure you downloaded the records from the banks. You want to tally up the transactions, just give them a quick glance. Maybe look at a P&L for the last 7 days. Make sure there's nothing that looks strange or uncategorized. And then from there, you kind of wrapped up your week. Now at the end of the month, when your statements come in, you're going to go ahead and reconcile all your accounts. Please, I tell you this from personal experience, don't wait to reconcile your accounts, because if there's identity theft, if there's a large transaction, you really only have 30 days to report it. And the sooner you can report it, of course, reviewing the transactions on a weekly basis, and then ultimately reconciling on a monthly basis, you're going to catch the transactions, the bad transactions. Now, here's the thing. If you've got income goals, if you're a salesperson, there's actually a daily end of the day reconciliation, which is how many sales did I make? Where are these sales in the funnel? And then ultimately kind of the relationships, the interactions. Now, the relationships and interactions are important because if you do find something on your transaction list, you want to be able to look back at your daytimer or your calendar or the people you've interacted with to see maybe you went to a convenience store and you swiped the card for fuel, and it's that card that has the bad transaction. Now you can notify the convenience store, you can notify your bank. You're going to have more information to shut down that card to know what's going on. Identity theft is pretty bad because it happens from both internal and external sources. But again, that regular bookkeeping is good. Now, another thing you want to do is monitor your credit score. I mentioned that in the beginning. There are services that will monitor your credit score. They'll tell you when people are making inquiries. I do often see inquiries on my credit reports and some of the clients' credit reports that we've talked about in the past who have transactions they did not make or inquiries they did not do. Now, this is a problem being an entrepreneur or running a small business, is sometimes your business creditors will actually check your personal credit score, especially if you've guaranteed something, to make sure you're still credit worthy. And that's something you need to be aware of. And also the ratio of debt to income, if that changes significant, it's going to lower your credit score, but that could change because there is fraudulent activity like store cards, for example. Store cards are a big problem. Criminals will open those up and there'll be an issue. So you monitor your credit score. Any significant change up or down you need to know about. Any inquiry checking into your account you need to know about. And then ultimately you need to be able to freeze your credit score or freeze your credit report if you suspect some kind of fraud so that they can't finish their transaction. Next, you want to maintain a list of debts. So if you're part of our debt management system, and I've shown you how to keep that inventory of debts so that you can optimize payments, reduce cost of capital, and ultimately leverage low interest rates. Now, right now, interest rates are going up, so debt is not a smart thing to be doing. You want to be paying off debt with inflated dollars. That's why we're going to talk about how to increase your income during inflation. But ultimately, having that list of debt, and then you come back the next month and you've done your reconciles, you're updating minimum payments, you're updating debt balances and everything, and then you see this new debt that you didn't even know about. Now you know something's up and you can take action. And just a little sidebar here. So sometimes folks watch my content or they're on the website sustainablewealthsecrets.com and they look at this content and they say, how is it that somebody's going to have so many credit cards, mortgages, bank accounts, or retirement accounts that they're going to lose track of this? But that person's never really had a high income before. They've never really had a high net worth. It is entirely possible for a regular person to have moved from job to job and have multiple 401ks. Now, is it right? No, it's not necessarily right, but you could have multiple credit cards. You could have high balance cards that have extremely low rates, and you could have some rotation going on there. And legitimately, without any silly schemes or whatever, you could have 5 or 6 credit cards between a husband and wife team, or partners in their financial household. If you have rental properties, you could have, for every rental property, an individual mortgage or combination of mortgage and private loans, whether internal loans or external loans that you've used for the down payment. Maybe you're using hard money, maybe you're not. For a business, so in my case, I've got the household checking account I've got a business checking account, and I've got a checking account associated with rental properties. There's 401ks, Roth IRAs, traditional IRAs. There's all kinds of reasons why you could have 20 to 30 different accounts that need to be reconciled, that need to be reviewed, because any one of those accounts could have problems. And the relationship with your bank matters, because when you do identify a problem, you want to make sure that bank shuts that stuff down. This is the one thing you don't want to have happen. Got a lot of cash flow and moving through your business, $20,000, $30,000 a month, and the bank says, look, we've got fraud. We're shutting down the whole account. Because again, they can see, I've known some clients they're tattoo artists, and they have a lot of cash. They run a studio. They got a lot of cash moving through, and then the bank freezes their account because they think they're money laundering. No, it's a cash-based business. I've been an owner of several laundromats. Same problem. You want to make sure that you have at least two accounts, because one is none and two is one. You want to have the forward-facing credit card, and then you want to have your back-end cards that, you know, I've known people that have enough free credit on their credit card they could just buy an $80,000 car. It's just not that you should ever do that, but it's nice to have the ability to do that if you had to. You might come across an opportunity where you find a distressed asset for, it's a $160,000 asset. Maybe it's a house, and you're able to put $20,000 down. You write one of those 0% interest checks, and you secure access to the property. And within 30 days, 45 days, you flip the house. Now you got your money back. Anyway, this is not financial advice. This is just awareness, so that you know how to approach the topic of identity theft. High income professionals, entrepreneurs are targets of identity theft. And in fact, let me see if I got one more tip here. I already mentioned the Act Quickly. In fact, let me give you a scenario, because we do talk about strategic approaches to things. If you are a scammer, and I've been fascinated by scammer payback lately, but ultimately, if you're a scammer, a lot of times they just buy mailing lists. So they're going to go out, and so the guy that's going to rob your house is going to go out and get the mailing list, or go to a community that has houses with stuff in it worth robbing. But the mailing list could be a jewelry store. If you make a lot of transactions on a jewelry store, they could stake out the jewelry store and just follow you home. But even online scammers, including those in India, including those in other countries, they simply get a marketing mailing list to identify high-income professionals, to identify people that have a lot of transactions or a lot of bank accounts open, and they will look at the older age demographic, and they'll just target and start scamming the hell out of them. This is a real thing, and whether or not it's your situation or the situation of an elderly family member or an older friend, it's important to be aware. The best defense for identity theft is monitor your credit score, regular bookkeeping, and report anything you find as quickly as possible. The forward-facing card is a plus. The list of debts is a plus. But of course, if you're doing good bookkeeping, you should be able to print out a profit and loss sheet. And then also the most recent transactions by... here's a concept that I learned from a mentor a while back. If you can't print out from your accounting system the most recent transactions and have a one-to-one match with the statements from the bank and other things, then you're not serious about building wealth. You're not serious about keeping more of your income. Because if you can't do that, then how do you know where the money's going? Yeah, you can use the petty cash scheme, or maybe if there's money in the bank account, after you pay all your bills, if there's still money in the account, then you've won. But again, we're teaching you how to fight inflation. We're teaching you how to leverage debt, to build assets that cash flow. We're teaching you how to do a lot of things that are not taught in school, but are often common sense to those who have high net worth, that have a lot of the ability to turn their active income into passive income. So again, why lose any of that to identity theft? Why be frustrated and concerned when you can follow those steps and get going? Again, if you have any questions, put them in the comments below, and we'll get them in another program. We're about to go to part 2, which we're going to talk about increasing income in a high inflation area. For members of From My Desk, you can go out to part 2 in the membership site. Be sure, and by the way, these These episodes are on different platforms. Okay, so it's not one ticket opens it all when it comes to the From My Desk. But of course, as a paid subscriber, you're certainly welcome to contact my office, and I'll make sure somebody gets you access to any of these programs that you want. So this is part one. There'll be two more parts. I'll see you in the next section.